I'm Michael Brandwine, and I'm a partner at the Gordon Law Group. You're about to watch a webinar I did on Puerto Rico Act 60. Act 60 is very, very important for a lot of people, including cryptocurrency investors. I don't know if you've heard, but you can get substantial tax benefits if you go to Puerto Rico. I won't go into it too detailed, but check out the video. Make sure to subscribe to our channel, like this video, and leave a comment below.
So we're here to talk about Puerto Rico Act 60, what it means, what it does. There's a couple of different aspects of it. The biggest thing, and this certainly applies to cryptocurrency, is no capital gains tax. So as of right now in the US, we have short-term capital gains, we have long-term capital gains. What does it all mean? It means that in some respect, when you sell an asset like cryptocurrency into cash, USD, for instance, or you even trade one cryptocurrency for another, let's say Bitcoin to Ethereum, there's going to be a taxable event. You either have a gain or loss, and it can generate quite a high tax bill. And we see this all the time in our practice. And I guess that's why people always ask, well, what can I do? I didn't realize I was going to have so much money out, or even if they did realize it, I don't want to pay so much money. Well, no capital gains tax under Act 60. Capital gains is passive income. That's what Act 60 is really all about, trying to avoid passive income tax. Another aspect of Act 16, we'll talk about this a little bit more later, setting up a company and paying corporate tax at 4%, and then issuing dividends to yourself that are tax-free, because that is also passive income. So capital gains, tax-free, dividends, tax-free. Another big thing here too is you move to Puerto Rico. As you know, Puerto Rico, it's not its own country. Obviously, it's a U.S. territory. You're still a U.S. person. You don't have to give up your U.S. citizenship or anything like that. You're still American. You're simply moving, and we'll talk about this a little bit more later, to Puerto Rico and living in Puerto Rico. And as you can see from the background, they have some pretty good weather there. So if you like nice weather, I live in Chicago. We get nice weather, I don't know, 5-6 months out of the year, and then the other 5 or 6 months, maybe not so much. So although I'm not a meteorologist, you're probably going to avoid a lot of snow down in Puerto Rico. What is Act 60? It promotes investment in Puerto Rico through tax incentives. That is kind of the big point of this here. The U.S. government wants people in Puerto Rico. They want people in Puerto Rico spending money, basically pumping money into the Puerto Rico economy. So it's a good way to get people to Puerto Rico. Well, let's offer them some tax breaks. You may have heard of Act 20, Export Services Act, and Act 22, the Individual Investors Act, that were enacted in 2012. Essentially, Act 20 had to do with businesses. Act 22 had to do with people. Now you have the benefits of both consolidated into Act 60, Code of Incentives. So essentially, you may have heard of the Act 20, Act 22. It's now, really Act 60 moving forward, with some updates for the qualifications. But in a nutshell, that's what Act 60 is. It's essentially the Puerto Rico rules, or however you want to think about it, to get people to come to Puerto Rico and contribute to the Puerto Rico local economy and get tax benefits from doing so. So how is this feasible? How is this possible? I thought that if you're American, you're just going to pay taxes pretty much wherever you are, anywhere on this planet. That's what people say, and that's generally true. So how is it that Puerto Rico sort of gets this special treatment? Well, it's a U.S. territory, like I just said. As you know, it's sort of like a state. It's not one of the 50 states, but some people call it the 51st state, colloquial speaking. More independence. They have their own sort of tax rules and regulations on island that sort of, I guess you could say, work with federal tax rules here, mainland in the United States. So that's how Act 60 kind of exists. It's an incentive program. It's essentially a carve out, I suppose you could say, to general US tax laws as they apply to passive income for individuals, capital gains tax, dividends that are taxed, and also business taxation. You probably know that as of right now, the general corporate tax rate for corporation C corps in the US is 21%. That changed a couple of years ago under the uh, prior Trump administration, and it still is the case today under the Biden administration. And I guess we'll see if that changes moving forward. It might actually increase from 21 to, who knows, 28, 30, not sure. Who is Act 64, right? Should everyone do it? Can everyone do it? Is there really a point in doing it? Why do it, right? Generally speaking, and I don't want to say this is absolute, but just to give you some ballpark numbers and make this more tangible and easier to process. Let's say you pay more than $15,000 in taxes per year to the US federal government. This may be something that's right for you. You're paying a nice chunk of change to Uncle Sam each and every year. This might be a program that you should consider. The next thing that's on this slide is anticipates high capital gains in the future. I talked about cryptocurrency earlier. Cryptocurrency, stock trading, anything that generates capital gains. This is a wonderful program for someone like you. And of course, now with the crypto market booming, exploding, whatever you want to call it, I would say that this is a big deal for someone in your shoes. Want to retain U.S. citizenship. Again, I've had people in the past say, I don't want to deal with U.S. taxes anymore. I'm just going to leave. I'm going to move abroad and also renounce my U.S. citizenship, and I'm just going to forego being an American. You don't have to do that here. You can be American. You can change your residency. You don't have to go through that process. You don't have to deal with any types of exit taxes or anything like that. I think that's very important, or at least it certainly would be important for me. The last point on this slide, willing to move to Puerto Rico for the last 3 years, haven't been a resident in the past 10 years. This really hasn't come up much. I don't think I've seen in practice anyone who was a resident of Puerto Rico and then wanted to sort of avail themselves of this, or they were resident, they left, they want to come back. But it is something that comes up a lot that people say, well, how long do I have to stay in Puerto Rico for if they don't want to be there indefinitely? Of course, you can be there for the rest of your life. I generally say at least 3 years. So this is not something that's for someone who plans to avail themselves of this program for, a month or something in Puerto Rico. That's not how this works. I do also want to point out that a lot of our clients who want to consider this are high net worth clients. A lot of our clients probably have at least $1 million in net worth, and that's kind of what drew them to this program, this act in the first place. But you don't have to be someone like that to actually take advantage of Act 60. There's probably some upfront costs that you're going to have to consider, whether it's legal fees, Puerto Rico payment fees, and we can touch on that a little bit later. I would say that generally speaking, having a high net worth, and I know that's sort of subjective, is certainly a facilitator factor in considering Act 60. Sounds too good to be true almost, right? Zero tax on passive income. So what's passive income exactly? Capital gains, passive income. I trade stocks. I'm making gains from the sale of stock. Passive income, generally speaking. I don't want to go down the rabbit hole of being an actual trader, but for most of us, we just sort of invest on the side. We get capital gains taxes, right? And you could have investments that yield dividends, or you own a business that produces dividends to you as a business owner. Those are also zero taxation. Interest from bank accounts, for instance, that's passive income. Pretty amazing when you consider the tax rates in this country. And like I said before, if you're a U.S. person and you move abroad, just because you move abroad doesn't mean that somehow the tax laws don't apply to you. If you're a U.S. person, you move to Japan, you're not sort of just free of U.S. taxation. That's not how it works. 2 to 4% corporate tax. Well, as I mentioned before, C corps in the US can pay 21% tax at a business level. And then if the shareholders get dividends, for instance, distributions of profits, they pay tax again, hence double taxation. So this says businesses with more than 3 million, 4%, less than 3 million, 2% for 5 years, then 4%. So you've got lesser taxation on the business income of a corporation. And it's far less than what it is in the US, 4% tax. You're going to get a 75% tax exemption on state property taxes and 50% tax exemption on municipal taxes. And we'll talk about this a little bit more as we go along. So overarching theme here is you're going to get substantial tax benefits under Act 60. So here's an example of savings for one tax year. Let's say you've got someone, you're watching the slide, you say, okay, I make about 500,000 self-employment income per year. Let's say you're paying somewhere around 29% tax on that. So that's 145,000, in federal taxes. That's a lot. 145,000 in federal taxes is a lot of money each and every year. Puerto Rico tax rate, 4%. How does that work? Well, and we'll talk about this as we go on. You've got a company that could be a corp that's essentially qualified under Act 60. The type of business that you're doing has to qualify under Act 60. But if it does, it could pay 4% and then issue dividends to you at 0%. So 4% is 20,000 in taxes, and money that's pulled out of the business as dividends, 0%. So 145,000 in taxes without Act 60, 20,000 in taxes with Act 60. That is an incredible savings, I think, and I think most people would agree with me. You're talking about $125,000 in tax savings. Needless to say, that's incredible. Now let's move on to the second point here. 500,000 long-term capital gains. So long-term, generally speaking, I hold a capital asset for at least a year, then I dispose of it. I pay 20%, so it's 100,000 in taxes. That's a lot of money. Puerto Rico, long-term capital gains, short-term capital gains, whatever it is. If these are Puerto Rico sourced capital gains, 0% tax rate, $0 in taxes. So think about what I just said. If you are this individual who has income and capital gains, you're now going to pay approximately $20,000 in taxes, and you will save about $210,000 in tax savings at a federal level. That doesn't include state tax savings, doesn't include annual costs to Puerto Rico. I'm going to ballpark those around 15,000. You could see that in the red box. But that is an incredible savings. And some people don't believe it. It's real. I mean, these numbers are just for demonstration purposes. Obviously, your situation can be different. But if you're someone that has self-employment income, you also have investments otherwise on the side, whatever you want to call it, you can get savings each year, hundreds of thousands of dollars at a US federal level. Again, if you live in a state that has income tax, California, New York, Illinois, Ohio, the tax savings can be even greater. But there's a catch. There's always a catch, right? But I would say the catch here is not sort of a negative catch, and I don't think in any way, shape, or form it inhibits your want to go to Puerto Rico and participate in Act 60, assuming you want to do that. So what is it? The tax benefits only apply to Puerto Rico sourced income. So that's very important, and that's something that is a complex area of law. Generally speaking, Act 60 is for people with Puerto Rico sourced income. Keep that in mind. So what does that mean exactly? Well, capital gains made before you move will still be subject to US tax. How does this play out? People say to me, Michael, I have cryptocurrency that I bought in 2018. I didn't touch it. I bought it at X amount of dollars, it has now appreciated greatly, right? The crypto market's booming. It's going up. I want to go to Puerto Rico and take advantage of Act 60. Okay, the built-in gains, as most practitioners will say, that is not subject to Act 60. Gains made after qualification, that can be subject to Act 60. So that is something to keep in mind. But if you wait to realize those gains that are not Puerto Rico sourced, excuse me, and you've been a Puerto Rico resident for 10 years, you can have a reduction in the non-Puerto Rico sourced capital gains. So if you're moving to Puerto Rico long term and you could hold on to those assets, you actually can get a benefit even for the non-Puerto Rico sourced capital gains. Unless you want to wait 10 years to sell, you'll have to realize the gains now and you have to sort of repurchase assets. So Act 60 is really great for people who anticipate high capital gains in the future, high appreciation moving forward. The current law extends the tax benefits Puerto Rico sourced income made through 2035. Obviously, that's over a decade into the future. Also should point out that even if you are a Puerto Rico resident, U.S. sourced income is subject to U.S. taxation. So what does that mean? If you have real estate in the U.S. and it's a rental property in the U.S., the fact that you're in Puerto Rico, the fact that you're qualified under Act 60, you can't say, well, that U.S. sourced income, that's all Puerto Rico sourced. That doesn't count for U.S. tax purposes. No, that's not true. That goes back to the prior slide. Tax benefits only apply to Puerto Rico sourced income. Some tax considerations, corporate municipal taxes. There's a top rate, 0.5% of gross income of a business, assuming you have a business. Obviously, 0.5% is not a humongous number, and obviously there's a lot less even added to the 4% than paying 21%. Personal property tax on business assets, average rate is about 10% of the net book value of the equipment, furniture, and fixtures used in the business. So if you have a business that's qualified under Act 60, keep that in mind if you have equipment, furniture, and fixtures used in that business. A lot of my clients don't, some might. Taxes vary by municipality. Tax rates change based on where you are, but generally speaking, just be mindful of these other tax considerations. This all sounds great. Looks like a lovely place to live. In the slide, you can see the fantastic beach, one of the many beaches in Puerto Rico. How does this work? How do I actually do it? Is it true I have to go to Puerto Rico? Yes, you do. You must move, actually, to Puerto Rico. So that is one of the caveats. Move to Puerto Rico and purchase real property within 2 years. You may have heard that under prior incarnations, Act 22, for instance, you may have had to buy real property, then you didn't have to buy real property. They kind of changed the rules a bit. Right now, Act 60, you go to Puerto Rico, you have to buy property to live in within 2 years. If you're married with a spouse, have kids, they're going to come with you to Puerto Rico. You have a business. I want to go to Puerto Rico and take advantage of Puerto Rico tax benefits and keep my business in the US and operate in the US. No, your business operations go to Puerto Rico. Banking, social clubs, memberships, et cetera, that goes to Puerto Rico. Got a driver's license in Puerto Rico. Register to vote in Puerto Rico. If you're religious, go to your church or synagogue in Puerto Rico or other house of worship. Donate $10,000 to local nonprofits annually. That is something that's relatively new under Act 60. You're going to make a $10,000 per year donation. You have to file an annual report and pay a $5,000 filing fee after acceptance to Puerto Rico. So this goes back to a prior slide where we discussed roughly $15,000 in sort of formation costs to Puerto Rico. That's where we came up with that figure. See Puerto Rico tax on the right side, 20,000 plus 15,000 K annual costs. You're going to have some fees. That just is what it is. You may have heard of some tests, the physical presence test. tax home, closer connections test. So what do these mean? You may have heard that you've got to be in Puerto Rico for at least half the year, 183 days during the tax year. That's true. It doesn't have to be consecutive. Or another way to qualify is you have to be in Puerto Rico for at least 549 days during the tax year and the 2 preceding years, at least 60 days each year. Generally speaking, just as a practitioner, the 183 rule is usually how people pass it. If you're going to move to Puerto Rico, you're probably going to be in Puerto Rico for more than that. So that will pass the physical presence test. The tax home test must not have a tax home outside of Puerto Rico. Going to Puerto Rico and buying a house is great. If you keep your primary residence in California, that's where your driver's license is, that's where you're still registered to vote. There's a good chance that your tax home isn't really in Puerto Rico, which also brings us to the closer connections test. You're going to basically move your life to Puerto Rico. That's your permanent home. Your kids, your wife, your husband, they're going to come with you. You want to vote. You're going to vote as a Puerto Rico resident. Like I mentioned before, social or religious organizations. Join them in Puerto Rico. Anything else you can think of that you do on a regular basis, wherever you are in the US, that's going to Puerto Rico with you. So 3 tests: physical presence test, the tax home test, where you are a tax resident, closer connections test. Satisfy all 3. That is how you do it. But there's more. There's always more. I mentioned this before. Individuals must donate $10,000 per year to Puerto Rico nonprofits. Not shockingly, you can't donate money to a nonprofit that's owned by yourself. At least 50% toward organizations working to end child poverty. So the point of this is to donate money to charities, $10,000 per year. I haven't seen anyone have an issue with this yet in practice. I think most people are very happy to do it. And again, with major tax savings, it's easy for me to say it's a piece of cake, but I haven't seen this become an issue. And again, just be mindful of that rule. I mentioned the change to the recent law, as Act 60 has it now, that within 2 years you have to purchase real property in Puerto Rico, must be used as the permanent residence, must be owned solely by the individual you, or jointly owned with a spouse if you have a spouse. You must file an annual report with the government of Puerto Rico and pay a $5,000 filing fee. So yay, more money to spend. But again, in light of the potential tax savings, hopefully you can see the benefit of even having to pay that fee. But there are ongoing reporting requirements that I want you to be aware of. Okay, so we've been talking a lot about individuals, passive income, the benefits thereof, but I've talked about 4% tax on corporations. So how does this work? You have a business. Business is going to be in Puerto Rico. It must be an eligible service, for instance, advertising and PR, education, financial services, consulting. I see the last one quite a bit, consulting. The business in Puerto Rico is formed. It's treated as a corporation. It must have a bona fide office or establishment in Puerto Rico. I mentioned this before. That shouldn't surprise anyone. It needs to really be in Puerto Rico. It needs to be formed as a business in Puerto Rico. Some people say, well, I have an LLC that I formed in New York. I can use that, right? No, this has to be a Puerto Rico business. There are some considerations. What if I have a business in Puerto Rico, but I have employees everywhere? I have employees in the US, for instance. I have business deals in the US, other ties to the US and otherwise. This may create some additional tax liability concerns and disclosure requirements. That's a bit beyond the scope of this webinar, but that is something that is important to be mindful of and should be discussed with a tax professional, an attorney, for instance. People always ask me about audits. I'm moving to Puerto Rico. Is this going to be scrutinized? Are people going to look at it? What could happen? And I always say, the IRS can audit you. That's a real possibility. You need to really be eligible for Act 60. You really have to be eligible for the Puerto Rico savings. This goes back to the 3 tests we talk about for individuals and the tests for a corporation. If you didn't follow the rules and you really shouldn't have been able to take in advantage of the Act 60 benefit, what could happen? You can owe all the taxes that you saved. You can owe interest and penalties, failure to pay penalties, failure to file tax returns penalties in the US. You could have higher penalties if the IRS believes you committed fraud and assess more penalties on top of that. Interest is compounded daily from the date the tax was due. People always ask me, what's the interest rate? It varies, so I'm not going to say an interest rate. There are different rates. But in a nutshell, you could owe a lot of money to the IRS. And I guess the whole point of Act 60 is you're looking for tax savings that can be all washed away very quickly. You should use an experienced professional to discuss Act 60, submit paperwork for Act 60, have guidance for Act 60. Well, when to start? The tax year, January 1st through December 31st in any given year. You have to be in Puerto Rico for at least 183 days of the tax year to get benefits. That's sort of the basic half the year test. If you think about that logically, to get full benefit for any individual year, if you want to go there in September, for instance, and say, well, I want to qualify for the entire tax year, well, that doesn't really make sense because you couldn't satisfy the physical presence test for that particular year, even if you somehow satisfied the tax home and closer connections test. So the latest move date, really early July. So if you want to get tax benefits under Act 60 for any given tax year, be mindful of when you can actually do that for that tax year, or else you have to wait and sort of do it for the next tax year. But you can apply for Act 60 after you move, and they can essentially apply for the entire tax year if the application gets in soon enough so that you can actually pass the 3 tests, and of course you're ultimately accepted thereafter. It can apply for that entire tax year that we are discussing. I don't think a lot of people know that, but that's important to think about, because if you're someone who, for instance, participates in the crypto market, that market changes every day, every hour, whatever it is. It changes a lot. So Act 60 can apply retroactively, assuming you can satisfy all the tests and all the conditions for that given year. I want to thank you very much for watching this. I hope that you learned a bit about Puerto Rico Act 60 tax savings. I hope you learned a lot, and I hope to hear from you soon.
Make sure to subscribe to our channel, like this video, and leave a comment below.